see the whole world shaking, and you feel your heart is breaking. Take my hand, no hesitating. Oh, when you're just so tired of trying, all alone you feel like hiding. Together we'll keep fighting. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Feel this, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Can you see the sun is shining like a new hope? Feel it rising, coming over the horizon. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Feel this, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. There's no stopping.
Happy tonight, walking in the winter wonderland. Here's the bluebird, here's the say, here's the bluebird. Love song as we go along, walking in the winter wonderland. In the meadow, we build a snowman, and the is awesome brown. You married, you say no man, but you could do the job when you're in town. Later on, we'll conspire as we dream by the fire. The face unafraid, the plans that we made, walking in a winter wonderland. Oh. Okay, I wanted to do that for because we finally had some snow in the Hampton Roads area of Virginia. Well, actually, there was snow a lot of places, and it's usually north of us going up to Williamsburg and Richmond, but we got it. It was about, I think we got about 4 inches in Hampton. I think Virginia Beach got some more, but it was nice to see it. I bought snow boots up in Putnam Valley, New York, when we visited our oldest daughter in 2018. I haven't wore them since. I'm actually going to go. But now I was busy today doing computer work and prospecting. I'm going to go out tomorrow with my boots from Putnam Valley, the Kmart that's no longer there, that I bought in 2018. But I also think we should push Christmas more now into like mid-January because there's a better chances of us getting snow and having a white Christmas. So maybe if enough people sign a petition. Maybe we could move Christmas to about like January 15th, January 20th, or whatever. That'd be good. Put it around the inauguration. You know, you have Christmas, you have inauguration of a political person, and we could just celebrate everything. Okay. All right, that's enough of that silliness. Let me just close out this song. Just having a little fun, and let me do my preview, and then we'll talk about today's topic. Okay, so let's jump into today's topic. It's March. March. It's January 22nd, 2022. I'm Chris Gajulol of Real Estate with Mr. G. I am an associate broker for eXp Realty, working in Hampton Roads, Virginia. Okay. Today we want to talk about, and I picked this topic because it's truly a current event, because mortgage rates have gone up. I saw 3.45. The article I'm going to show today says 3.50. So, you know, that's a good amount from 2.8 to 0.75 of not too long ago. Historically, it's still low, okay? It's still a good rate, and we're going to see comparisons. It's still a good rate, but it's moving up. And unfortunately, what's happening as well is that the not only the mortgage rates are going up, but prices of homes are going up as well. So, you know, you put the things together, and it becomes more expensive to own a home. Now, I don't want that to deter you from buying, okay? Because even if at the end of the year, if we happen to reach 4% mortgage rate, a 4% mortgage rate, it's still better than what it was many, many years ago. I mean, we're going to look at comparisons. But today what we're saying is that if possible, if you're in the market for buying a home, and a lot of times people say, okay, I'll wait till spring. That's usually a very hot time in the real estate market. You know, it's warmer out, it's easier to move, it's easier to visit homes, you know, assuming, you know, you're not in the state where you get a lot of snow, okay? Usually, I mean, we're, you know, in the southern part of the United States, not that south, because we do get, well, it's changing. It really is. Because now, you know, you have South Carolina getting snow, you're getting Georgia getting snow. They don't get, or we don't get regularly snow, right? You know, then maybe in New York or Minnesota or Maine, or going all over to the northern states, but we're beginning to get it now. But in general, most people start looking when it starts warming up, and when they know, and this is dealing with families with children, that they would like to find a home that they could move within the spring or early summer, and their children start a brand new school in September. I mean, of course, if they're moving a long distance and they are looking in spring, some of their children, if not all their children, have to make a change in the spring semester with their school systems. But sometimes it just works out where they move and it's ready to start the summer vacation. Here we started early, maybe by the second week of June. Back up in New York, it was like at the end of June. You go further south, it's really at the end of May that they're finished school. So they really have June, July. At the end of August, they start going back. Here, they start going back in September. But nonetheless, many people want that time period to make that change, and then their children start a new school within the fall. All right. But what we're saying, and that's basically the mantra of all real estate agents, is to buy now and to sell now. Don't wait. We don't want you to wait. That's the bottom line. I want to be very truthful. We don't want you to wait till a couple of months down the road, whether it's spring, summer. We want you to buy now, but we're going to give you a good reason to buy now. And if you don't want to be bothered with coldness, we're going to tell you why you should bother with coldness right now and maybe snow. Okay, so let me get up my graphic for today. Oh, actually, I was reviewing that. Let me go back up a little bit. I was setting that up for my podcast here. All right, so with mortgage rates climbing, now's the time to act. And what they've done here, so I'll get my trusty highlighter here. So last week, the average 30-year fixed mortgage rate for Freddie Mac dropped from 3.22% to 3.45. I'm a little dry. Let me get a sip of water. Okay. I feel like Mark Rubio. Okay. To 3.45%. And that's the highest point it's been in almost 2 years. So if you were just looking maybe 6 months, 8 months ago, it was below 3. Okay, now it's moving up. It's at that half point. I'm going to show you an article where they're saying it's 3.5. It's definitely moving up, all right? But what Freddie Mac is doing here in this article is they're showing you what they expect the rates to go up. So right now we're in the first quarter of 2022. It's at 3.4. And we're seeing it, or at least Freddie Mac is seeing it, going up to, by the end of this year, 3.7. All right? As the numbers grow, the jump in rates is in line with this expectation from Freddie Mac. And what they also indicate is that your mortgage rates are projected to continue climbing throughout the year. But should you be worried about rising mortgage rates? What does that really mean for you? Now, what it really means to you is that, of course, and this is very basic, and what I've been learning when I'm talking to a lot of people, to my buyers and to family members who are purchasing, they aren't aware of, like how a higher rate will also give you a higher mortgage payment. And that's coupled with rising home prices. So a house that you're interested in right now, and here they use the term affordability, the house that you're interested in right now, if you wait, let's say it's a house that you're interested in, it's not going to be here in the second quarter or the third quarter when we get to the summer. Okay, it'll be gone by then. But you see a house that's 3 bedrooms, 2.5 baths, it's $350,000. To own that house now will be less expensive than owning it, let's say, in summer, where interest rates could be 3.7%. Okay, and not only what happens is that house, well, stepping back, many projections are going with about a 5% increase in home prices in 2022. So they're going to go up about another 5%. So that house in the summertime will be more costly to own. So what's important is that if you uh, can't, well, many people want to wait, but if you're able to move now, if you have the funds to do it, if you have the ability to move right now, if you have made the preparations, especially if you have children, that you might have to transfer them to another school system, it's important to consider that now. Consider doing that now. Okay? So, what this article is trying to bring in over here, and I don't want to say try, they are bringing it, but they're saying the good news is even though rates are climbing, they are still worth taking advantage of. Historically, data shows that today's rate, even at 3.5%, is still well below the average for each of the last 5 decades. And we go down to the charts and we see in the 2010s, they were 4.9%. Going back to 2000s, from 2000 2009, they were 6.7. In the 1990s, they were high. Look how much they were in the 1980s. Okay, so they definitely are much lower than they were previously, but we see them going up higher. That means you still have the great opportunity to buy now with a rate that's better than what your loved ones have paid in the past. If you buy a home while rates are in mid threes, your monthly mortgage payment will be locked in at that rate for the life of your loan. So if you go with a fixed rate loan and you get it at 3.45 or 3.5, it will stay at that amount even though rates will go higher. Okay? So you kind of lock it in. Buying now is a great way to protect yourself from rising costs and future rate increases while also securing your payment amount for the long term. And we'll move down a little bit here. The New York Mortgage Railroad. Okay, and they're just reinforcing it. I took this article here just to emphasize the point. This was actually from Housing Wire. Their website came out on the 20th. Mortgage rates have eclipsed 3.5%. Okay. So they're saying here, okay, the article I just showed you probably was written a week before. Okay. And because they're saying here that it eclipsed to 3.56% during the week ending January 20, rising from 3.5 the week prior. So the other guy I just showed you, which actually hit my blog this week, is a little behind the rate. So it's really gone up. All right. Now, and they're also talking about here non-qualifying mortgages. These are the non-conforming loans that they expect them to go up as high as well. So that's there. What I'm trying to do there is showing, I'm emphasizing the point that the rates are going higher along with the home prices. Okay. Now, what I want to reiterate, and I'm going to close this out right now and put me back up here. And again, I talk about this every live stream podcast. The biggest hurdle I have with my buyers, and buyers in general, is getting them pre-approved before we start looking. And I might give them one freebie. if people are holding off speaking to a loan officer, to a mortgage loan officer, and if the house that they're interested in is, nearby, I'm not going down all the way down to Virginia Beach uh, with someone who's not pre-qualified yet. But if they're interested in the Hampton, just to break the ice, I'll show it to them. But I will tell them, especially if you want to apply for this house, you got to now speak to a loan officer. But I'm not going to show you any other properties until you get pre-approved. I'm not going to, and this may sound negative of me, but all real estate agents and realtors, okay, we get paid a commission, and we only get paid if we close, and we get paid at closing. So a person who I'm showing a house to today, today is the 22nd, we probably won't close to the end of February, okay? So I'm not getting any type of payment on this deal until about 30, 35 days afterwards. So we're not working, if I was getting paid base salary, and then and the hours if I have, if I'm an employee and I'm working 8 hours and I'm making, let's say they're paying me $60,000 a year, then yeah, I don't mind driving around maybe for a bit, showing some homes, and then say, okay, now it's time to be pre-qualified. No. And it's not just wasting the agent's time, it's also wasting your time. Because if you can't be pre-qualified, my chat thing is, let me click on this. Is someone here? Someone's posting a website for you guys to click on to go somewhere else, wherever. Okay, but going back to what I was saying, it's best, like if you're thinking about buying a house and you have no idea how much you could afford, and you have no idea where your credit is, and the time that I'm showing you, or another agent showing you a house or houses, that is time that you could have worked on speaking to a loan officer, finding out if you are pre-qualified right now, and then knowing the price range you should stay in. For example, I have a lot of this situation that comes a lot up with my active military and or veterans who are out of the military, but people who are going to use a VA loan. And this one thing that's called VA eligibility, okay? They may say, per the VA eligibility, that you could buy a house up to, let's say, $425,000. But that does not mean that's what the bank will lend you. It's going to be based upon your income, and it's going to be based upon your credit score. So you might have that VA eligibility, but per your income and your credit score, about how much debt you have to pay out, it may be $250,000, or it might be $200,000. So wasting time showing homes $250, it's wasting your time, and it's wasting the agent's time. You have to zone in to what you could afford. All right. And what's worse is that you fall in love with a house that's $350,000, and then you find out you can't be approved for it. So that's really bad. That's, besides wasting time, now you're feeling hurt. Now you're sad, and you're not sure if you want to continue with the whole buying process. All right. So the most important thing is to speak to the loan officer first, and they will look at your credit report, see what your credit score is, see how much debt you have, and they will also, work in like your income, and whether it's your income from your job, whether you're getting any type of disability benefits, if you're getting alimony payments, child support, okay, you might have rental income. They analyze all that, and that's taken into account. And that really has to be done first. So, like a lot of people are afraid of finding out, what do I really owe? How bad is my credit? And yeah, it's people basically, well, I've been paying my cards on time, my credit cards and stuff. They're maybe okay with it. There are people who know, well, I had some late payments, I had some issues. The biggest thing is that you have to, even if there are issues, it's best to find out early, and the loan officer will tell you how to correct it. And it's not, and everything is on board. It's not like erasing your credit, using a new social security number. It's not anything like that. They will know, okay, if you could make an extra payment to your MasterCard account with Citibank, this will raise your credit score a certain amount of points. Okay. If you could pay down this debt, if you could make a little extra payment here, all right. If you have a collection, maybe you could call them and say, okay, if you take this amount, will you wipe it out and say it's paid for? So, and if you have to do those things, sometimes they take time. I've had buyers who cleaned up their credit within 30 days. I've had buyers who needed about 3 months to do it. But nonetheless, whether you find out you need a month, 3 months, 6 months, or maybe a year, at least you're on a plan, on the deadline, and you know what you have to do. Many of my buyers will say, okay, I know what I have to pay. I'll do it. And they have no idea of, the first thing you have to do, and we're going to see a film on it, is to pay your minimum, at least your minimum payment, and on time, okay? You always have to do that. But if you have a little extra cash this month, the loan officer will tell you which one you should really apply that to first, okay? So I'm going to show a short video. I'm actually going to show you two videos because I was supposed to show you one last week, and I just overlooked it, and I apologize. I always have an extra video. So let me go to one, and this one is improving your credit score, just about what we were talking about. So let's show that now. So I could take another drink of water, and you could watch this. I like that video because it's straight to the point. It's very easy. Pay your credit bills on time. Do your best to keep your balance at 30% or below. So in other words, let's say you have a credit line on a card of $1,000. Do your best to. I mean, if you're going to use it, you're going to use it, but keep it at about $300 of your unpaid balance. All right. If you go above that, let's say the minimum payment is $20, but all of a sudden you go above that 300, you're up to 500. Pay $200 on that if you can. All right, that helps improve your credit score. All right, and even if you have a couple of credit cards, you pay them off, and you want to close them down. Don't do that right away. Don't, especially while you're buying a house or in your process. You know, it's not easy to figure out. Let's put it this way. You know how the credit companies think. So you think if I cut back on my credit, you know, I slice up a couple of credit cards, it'll help me, but it doesn't. It's saying to them, you might have financial difficulties because you're closing these accounts. All right, it's insane. I know it's insane. All right, but keep them open, especially if you're in the process of buying a house, and even when you're in contract, you're waiting to close. Don't close out anything because a mortgage loan officer may or may not. Okay, probably most times they do. Like right before you're getting ready to close, they'll double check your credit again to make sure you didn't go out and buy a $40,000 car. Okay, so do your best to, of course, to pay them on time. If you can, pay a higher amount. And also keep them at about 30%. All right. So those are some ways to. The other thing it brought up is that if you check your credit score and you find out there's entries there that are in error, get them cleared up as fast as you can. All right. So those are little tips there on how to improve your credit. And let me show this other video that's actually for today, and it's saying what happens as these mortgage rates go up in 2022. What does higher interest rates mean for buyers? Okay, and an extra point that video brings out is that you should ask your mortgage loan officer if they have any down payment assistance programs. They come and go. They're not with all banks. Most of the times they're geared for the first time home buyer, and usually you are in certain wage limits, but it's also based upon how many people will be living in that house. So let's say if you're a single person, you may be eligible for a closing cost assistance, like if you're making up to $38,000 a year. If you're making up more than $38,000, and this is just an example, I'm not saying it's across the board for all down payment assistance programs, then you will not be eligible for it. Okay. But for this area, you know, in the high 30s, that's actually pretty good. And I think wages are going up anyway. So they might make changes to that. They might say a single person could make 40,000 or 45,000. But this is where it changes. So if you're going in with a wife and 2 kids, now there's 4 people living in that house, and that wage requirement goes up. So with 4 people living in the house, it might be 55,000 or 60,000. Okay. So, but ask your loan officer about that and see what programs they have. And then there's also what we have here in Virginia, the VHDA program. When you're a first-time home buyer, you can also finance that down payment. All right. So to make it very simple, on a $100,000 home, you usually have to put down 3%. That's with Fannie Mae. Freddie Mac is like 3.5. So that's $7,500 if I'm correct. Okay, and you could then finance that $7,500. So you don't have to bring cash to the closing table in the amount of the down payment. All right, so again, there are limits on that, on the amount of money you can make. It'll be based upon your credit. You don't have to have really great credit to get it, but it has to be a certain, well, the same thing to be eligible for FHA or Fannie Mae. It's usually around 620. I'm always going to have a loan officer contact me who could go down to 580. And I'm not saying they can't do it, but sometimes there has to be special situations where your credit score was low because of medical bills. And no one, right? We don't plan to get sick. We don't want to get sick, right? So all of a sudden, God forbid, something happens, you get sick. You got to go to the hospital, and now you have all these bills. We don't want that. But if you have a credit card, you have a bunch of credit cards, and you go out spending, and you buy stereos and MP3 players, so that's really old. And nice big computers, and you're at the help. Well, that's something you did that you didn't have to do, right? You could have been more careful, or bought some equipment, paid it down. Okay, so that's different. So they might be able to work if you went to the hospital, and also these gigantic bills came to you. So, but speak to your loan officer and see what programs they have and what best suits you. All right. So, what I would like you to do, if you, especially if you're just entering the buying process, come to my website. Let me get my here, realestatewithmrg.com down here. You could search for all homes in Hampton Roads. And if you happen to be a seller, you could put in your address and we'll get you a basic idea of what the price would be. But I will get a notice and I will fine tune that for you. And I also deal, I do with, my mortgage loan officers who specialize in first-time home buyers. Specialize in if you need advice on how to increase your credit score, they could help you along with that. So I would love for you to contact me with realestatewithmrg.com. You can just go there, or just whatever social media platform you're viewing this on now, you could shoot me a message and we'll get working on that ASAP. All right. I'm getting a call from my my producer, William, that I had William Burgess, that I have a special audience, a celebrity audience. Is that true, William?
Great news. We have a famous celebrity in the audience. He was a Cuban-American actor, band leader, and film and television producer. He played Ricky Ricardo on the American television sitcom I Love Lucy, in which he co-starred with his then-wife Lucille Ball. Ladies and gentlemen, Zianas.
Well, that was nice for Desi Arnaz. I know William with his English accent didn't pronounce the name correctly, but that was Desi Arnaz, also known as Ricky Ricardo from the I Love Lucy show. All right, so I'm glad you stopped by. So that's all for today's show. We'll see you next week. And if you haven't been vaccinated, I hope you will get vaccinated and get that booster. And if you're not vaccinated, wear your mask. Hopefully, we're getting out of this pandemic. Some of the states are saying that the numbers of people getting infected are going down. I pray that's true. I pray that's for everybody in every state, and we could put this behind us. But it's important to get vaccinated, just to stop it from spreading and stopping it from mutating. All right? So be kind to each other, and remember, the greatest power we have is to love, and the greatest gift, each other. So I'll see you next week.